Hello, welcome back to my channel. So today I want to break down a New York PM session trade that I took, and this was in demo, so this doesn't actually have any real money associated with it, but I just want to show you the process that I took in order to get this trade completed. So first I built my narrative. So on the 15-minute chart or 1 hour, I could see that there was a strong buy-side delivery after we had a failed attempt in London. So 15, you can see here we had a consolidation manipulation here that tried to go into the sell side but failed, and we ran up. So we were running up all the way from New York AM session, and then the next point, New York AM had a continuation trend. So this is the New York AM trend, so we went all the way up and then it formed the New York AM high. Then New York lunch had a retracement, so you can see here retracement back down between the hours of 11:30 to 1:30. So that is the New York lunch period, a period of 2 hours, and we had a retracement. But one thing I did note when it retraced was we retraced into a 5-minute order block formed in the New York AM session with nothing below except a breakaway gap on the 15. So keep note of that. So because New York had a retracement on New York lunch after a strong buy-side delivery in the New York AM session, I expected a continuation towards the high in the New York PM session. So that is how I built my narrative. And then getting into the trade, so you can see here we ran down into a wick, 15-minute wick, and we ran up. There was a fair value gap created here and an order block. So these were both violated on this move up. So this gave me some confidence that there could be a trend reversal coming, but it was still 1 a.m. or 1 p.m. So we should wait until the next session starts. Price reversed back into a BC created here, and then we slowly chopped going back and forth, one volume imbalance back and forth until New York PM started. So when New York PM started at 1:31, we had a run up consolidation. This run up actually had a BC in it, and then that was where I entered my as an institutional order flow entry drill model. So that is when there is 3 candles up and then you enter in the middle. So the stop loss should actually be placed just below this candle low. You can see it got violated, but for my case I want to put a larger stop, so I initially put it here, but then I moved it down to here because that's 3 PDO arrays away. So there's the volume imbalance, another volume imbalance, and there was a BC. So I entered in here. So 1, 2, 3. Because my narrative was going to the buy side, so my target was actually all the way up here. That wasn't my target, but that was my draw on liquidity. So that means I anticipated price to move towards in this direction, and I wanted to capture a few points from that move. And then my low-hanging fruit was here and this one here, this high of the New York AM range. So once price dropped here, I did think it would reverse, but then we started slowly going back up, and then I kind of noted that this is basically an inversion fair value gap, but because there was no wicks, it can count, but I'm not too sure on that one. So yeah, that's an inversion that we went down and then back, and that created an order block and a breakaway gap on the 5-minute chart. So over here, I'll put my notes on. Over here, I expected a quick delivery from this breakaway gap to this high, because when you go down quickly, you also move up quickly. So as you can see, straight up, straight down, exactly how it happened on the left of the chart. And then I also noticed that the macro times, we usually start before the macro time. So if we're bullish, 146 is when we started, and then we continued to run until 2. So usually before 2 or at 2, we do get a retracement from the start of the hour macro if the last 10-minute macro had a run. And that's exactly what happened. So 2 p.m. it stopped, and then we started retracing all the way until 2:30. So 2:30 had another run back to the buy side, and that was from 2:33 to 2:37. When that happened, I did expect the upper half of this level to stay open, because we're so close to the terminus, which was these highs. And as you can see, we had 1, 2, 3, 4, 5, so we spent 5 minutes here, stayed all closed within the upper half. And then the next run started from 246, which is similar to here, which started at 147. So exactly an hour later, we had the second run up from here to the next liquidity. So over here, I felt a bit of emotion. So I got nervous that maybe we're just going to retrace all the way back to my stop loss. Not sure why. Still learning on controlling greed. So this is basically, I think, greed, because you didn't want to lose the profits you made, and you're so close to the target, so you're just like, why not just take it? I should have just waited 3 more minutes or even 2 minutes, and it would have hit my target. But yeah, I think that is a lesson for next time. So that's my terminus. So even though price continued moving towards this relatively equal high that I mentioned in my previous video on my weekly bias, that I want to target these, and that's exactly what happened today. So we did leave a tiny bit from this one, but I do expect that to get hit probably sooner or later. So thank you for watching this trade review. If you enjoyed the video, subscribe and like the video to show support, and I will continue to make these sort of videos. Thank you.